Hey traders, welcome to another episode of Charts and Coffee. Great to see everybody. Happy Thursday, all. All right, we have the Get After It mug rocking today. A little bit of my favorite Ethiopian medium roast. Getting wild with a splash of heavy cream in there this morning. All right, so let's get to it. As we wind down this month of March, any end of quarter is going to invite the rebalancing. We've talked about rebalancing for a bit, but the rebalancing that we're going to continue to see into this quarter is heavily affected by the 10-year yield. So I think every day we really got to consider as we wrap up this month, what portfolio managers are going to have to consider in terms of the rebalance. And remember, rebalancing is really a matter of supplanting what goes in and what's coming out. All right, so with that being said, great to see everybody, and we're going to get right into the questions. Let's start off here with Heather Living. Take a look at Tesla. Sure, let's jump into Tesla. All right, so, I was looking at a list of stocks that were the names that dominated 2020. Tesla benefited from something that it will likely never see again. I don't mean that it's never going to go parabolic again. It could. I would never say never, but it's never going to be re-added to the S&P. Could it have another split? That's something that could be replicated. But what we saw in Tesla and in probably one of the more dramatic parabolic moves of 2020 was Tesla pre-split, Tesla pre-added to the S&P. And because of that, we saw the kind of price action we saw. Once that was done, then it was back on the narrative, the fundamental narrative around Tesla in terms of, well, why would buyers be willing to buy at a higher high through, say, 900? Now, that's not to say I'm down against Tesla. I mean, I think that, look, I think I mentioned a few weeks ago that when the market was going higher, one of the things that my husband typically does, I do too, it's what I taught him to do, is when he wants to own a stock, we do a couple things. We write puts on it until we're forced to buy the very thing that we want, collecting credit along the way. Pretty classic way to build a portfolio, and this is a longer term hold. So that was one of the things that you try to do. You write premium, you collect credit until the market gets down to a level, in this case, usually hugging the area around the 200 exponential, where you finally get your opportunity. Now, mind you, that didn't happen for a really long time. Doesn't mean you can't trade it in the meanwhile, but for longer term positions, that's typically what we do. This is kind of an extreme example because it's a parabolic name, but that's something I'll do all the time. So I guess I'm sort of kicking off this Charts and Coffee with a really simple idea. Most analysis is much more dependent on time frame and time horizon than we typically as a community give it credit for. Most disagreements and most clashes in opinion about markets don't come down to whether I think Tesla is going to go up or down or not. I think it's going to continue to go higher. It's right now bordering on turning into a near-term downtrend. It's most definitely in distribution. But if you talk to somebody looking at a 15-minute time frame, that's one conversation. You talk to someone looking at a weekly conversation, they're thinking, what are you talking about? This is still pretty much an intact uptrend. Yeah, it's been rocked, as many names have, through 2021, but this is still an uptrend. So think about that in terms of anything that you're looking at. And right now, I mean, even though I kind of went into that little diatribe, I have little to no interest in Tesla at the moment. I think there's so many other more interesting names that are tied to a macroeconomic narrative. And even the macros have been getting a little whacked, but here's where, Shane, your question comes in as a great follow-up. Where is my attention right now? So we're going to take a look at, let's go take a look at copper futures. All right. So when we take a look at copper futures, we're talking about two of the markets that are right at the heart of this macroeconomic environment. Now, let me go to the daily. All right, so here's a daily chart of copper. Again, is it getting rocked? I think a lot of things are going to get rocked as we go into the end of this quarter. We're going to see, and when I say rocked, what do I mean? Rather than very normal, organized, shallow-ish 38.2, 50% type retracements, testing the 34 EMA. Rather than those types of retracements, we might see markets that are moving into the 55. Markets that might transition into a little bit of distribution, become oversold before they rebound and regain their trending structure. So copper might be one of those markets susceptible to that. Crude oil could be as well. You're reading my mind as far as my playbook goes, Shane. I still like copper to the long side, but my time horizon is going to be a little bit more generous than 2 days from now, right? I'm thinking weeks, if not months from now. Freeport-McMoRan would ride the coattails of that trade. Canadian dollar. I like this one a lot. Yes, the dollar continues to strengthen. We can see that really clearly through the 6E or the Euro US. That's going to be your best way of looking at the US dollar. And one of the things that I've mentioned is both the 6E and the Euro US Forex have broken the 200 exponential. This means the dollar's still got a little bit more bullishness in it. This might be where we fatigue. I'm not going to try to make a bet on that. What I will do is look at where, and I love your question about 6C. When people say, Rog, are you still bearish dollars? Heck yeah, I am. But ask me against which currency. And that's where you start thinking like a Forex trader, because it's always about pairs. Buy Canadian dollars, short US is still working. Might it be a little bit more volatile? Yes. Might the Canadian dollar have to work a little bit harder to overcome the strength in the dollar? Yes. But when we have strong crude, we have a macroeconomic environment of reflation, calm dolls, and this is the leader right now, Canadian dollar, the loonie, as it's also known, will be at the front of the pack. All right, James, how you doing, my friend? Any thoughts on new entries in Ford and GM? Had a nice run in Ford and GM, didn't we? So by the way, James is asking a question from our Sector Secrets Mastery, and that's where we talk about ETFs and stocks and play the options with a slightly longer time frame. So we just finished playing both Ford and GM to the long side. And hey, good eye, James. Are we seeing a pullback? And a lot of what we're going to run into is some of the same narrative that I'm mentioning in terms of the end of month, end of quarter, James. And so might we want to be a little bit more conservative? Probably. Am I still bullish? Heck yeah. Remember that the XLY ETF, kind of going back to that aforementioned Tesla, this is a lot of Amazon and it's a lot of Tesla. And right now, XLY is suffering under the high concentration weighting of the XLI ETF group of stocks, where you have those two names inordinately weighted heavier than maybe the next 8 that come after it. And if you go a little further down the list, you'll run into Ford and GM. So I don't mind consumer discretionary. I think consumer discretionary right now looks a whole lot worse than it really is. We've seen retail numbers. They're strong. Stimulus checks are going out. I don't want to bet against XRT or XLY, but we have to be a little bit more granular about our trades. In other words, this is not 2020, gang. And I don't mean to be salt in a wound, but 2020 was a historic uptrend. It was an anomaly of a year in so many ways, both to the downside and to the upside. And this, what we're getting in 2021, look, I've been doing this for 30 plus years. This, believe it or not, it's a little bit more what trading feels like. Maybe not as volatile at the end of January and February as we've seen, but this is kind of what trading feels like. Things don't go straight up for days and days and weeks on end. I know a lot of you know this, but this is the kind of quarter, this is the kind of year where you build your trading chops. So kudos for putting time in to learn about the market. Kudos for putting time in your studies and in your chart analysis, because this is the year, a lot of traders will realize, oh, I really am pretty good at this. 2020 was a gift. As I've mentioned, my cat could have tripped on the keyboard and bought a stock moving higher. But now you think to yourself, gosh, what did I learn in 2020? And now I'm going to apply it. And this is where this is your hell week, right? This is where we become Navy SEALs. And it's true, right? It's true. I don't say that in any way to dishearten us collectively, but say, look, this is where you really take all those things you've learned and you put them to work. And probably the most important of which is being very, very selective in the part of the month like now and waiting, James. Yeah, we're going to be a lot more patient about this. Great winner for us before. The temptation is let's do it again, right? Let's get that dopamine hit and do it again. And while I love the structure, I don't mind to be a little bit more patient. So great question. And by the way, if you want to join us over at the Sector Secrets Mastery, it's simplertrading.com/sector. Pretty easy, right? Okay, next question is, let's see what we have here. Does that mean I'm buying the dip? Well, so Wilkin, great question. How do we buy the dip? How do you buy the dip? Dips or retracements, that's verbiage, that's lingo that applies to me only in trends. So our first job as a dip buyer, because dips happen, right? That needs to be on a t-shirt. Dips happen. Because dips happen, but dips are only a relevant and a tactical approach to a market that's trending. So a dip is really what? It's a pullback. It's a retracement of a trend. And because people just generically talk about, well, just buy the dip as arbitrarily a lower low or a market moving lower, the danger is you could be in a choppy market, or worse, you could be in a downtrending market. And that's where dips are not necessarily the mindset you want to approach. Downtrending markets, we don't pick bottoms. Distribution markets, we wait for an oversold level. That's a little bit more like a cousin to a dip, but it's not really a dip. So am I buying the dip? Absolutely. I am, but not broadly. I'm being much more specific, and I'm being much more, I'm leaning much more towards the Dow, the industrials, the transports, financials, energies. There are a number of sectors, communications, where the dip is valid. So thanks for the question, Wilkin. And, that's a lot of what we focus on. That's a lot of where our focus is right now in the futures room, where I'm focused on longer term macro swings. And also sector secrets, where I'm not interested in most of what's going on in the NASDAQ, very selective about the S&P, leaving the Russell alone. How can we play uncorrelated names, which is a really important skill to have, building a watch list of uncorrelated names, building a watch list that's built in accordance to the current macroeconomic cycle, and then sticking with those relative outperformers. All right, Viacom. So Tommy, great follow-up to what's going on in XLC and communications. So we saw what's happening in Viacom. XLC got absolutely Donkey Konged yesterday. Now, as soon as you see a move in XLC heading lower, remember, that's the tide, and all these individual stocks are the boats. And so when you see a move like that in XLC, and XLC, interestingly enough, is one of those rare ETFs that actually, as you can see down here, pays a dividend. Now, it's not an impressive dividend. This is not one of those dividend names that a lot of folks talk about. But one of the tendencies post-dividend is for a little bit of a pullback. I'm not saying that's all that this was, but we do need to be prepared for after dividend date, maybe a little bit of an unwind in terms of people who are playing the momentum alongside the folks who are actually building a position in the ETF or the stock, trying to get the dividend. So XLC went lower. So the first thing you got to think about is what happened to Google, what happened to Facebook, because that's absolutely what's going to affect Viacom. So Viacom had an abnormal move. That is not normal. Whether you're looking at the historical price movement ranges, the historical volatility like I do, or if you're just anecdotally looking at, wow, that candle's a whole lot bigger than any other candle I've seen, in the last year. You've got a candle that has now taken out the typical price movement range. I will always wait for an inside day or for a minor low. I'll wait for an inside day or a minor low. And for those of you that are unfamiliar with that, these are just simple patterns that we use to show a pause in the market. So that's what I'd be looking for in something like this. Do I think the pullback in FCX is temporary? I think the pullback in FCX is very much a part of the weakness that we're seeing in copper. The trend is broken. It's an oversold type market approach. This is no longer a dip buying market. And I've been buying dips in Freeport-McMoRan for a really long time. However, take a look at this. You guys will really dig this. So there's 4 factors that you need to think about when you're trading, or frankly, when you're investing. And of course, the first is price. And most people stop there. They don't really get deeper into the market than price. To me, the second, and we dedicated an entire class to this. In fact, most of my indicators that I've created that are on my screen here, and I've got a bunch of them here. So a lot of folks ask, okay, Rog, what's on the screen? So you can see I've got a bunch of volume profiles. I've got my propulsion dots, anchored VWAPs. I've got a clearing range tool, grab, Darvis. I've got a custom MACD. I've got my V-score. So there's a number of things that are running on this chart. Probably the most important of which is just a really simple look at volume. So I'm looking at the Darvis level right there, and this volume layer really stacking up pretty close to this previous low on the 4th. So now we're really talking more about, hey, let's pull out a slow stochastic. Let's take a look at Ready Aim Fire, which is a proprietary premium tool from Simpler Trading. If you don't have that and you want to trade chop, do consider it. But if you're just kind of curious about how to look at overbought and oversold, take a look at a slow stochastic, 21K 3D, look for where it's oversold. And you want that to sync up with that volume. Look at that ledge right there. It's like a ledge of volume. I talked about volume profile being something like price being Alex Henold, the guy who scaled El Capitan, the free. Oh my gosh, I literally get goosebumps just thinking about that. But anyways, it's climbing, it's scaling this wall, and so that's a ledge. That's a ledge that the market could stand on. If you think about volume profile in that way, it's going to become very powerful for you. And the trick to volume profile, I think, is multiple volume profile levels, multiple lookbacks, overlaying them. That's a good volume profile level. It's not a point of control, but I think it's one to keep an eye on for where FCX might be oversold. Just because we've broken an uptrend doesn't mean we've turned it into a downtrend. All right. Next up is, how do I use the MACD? Mainly as an environment type of tool. I don't use it as a trigger. No, I don't use it as a trigger. An old Forex trick, an old Forex approach that I still use even on stocks and futures is I'll use, so Forex, a true 24-hour, 5.5 day market. What we would do is we would put a 4-hour or an 8-hour MACD on a daily time frame. So I'll typically use a different time frame MACD on a longer term. So I'll use a shorter term MACD reading on a longer term time frame. Just an old Forex trick. I traded Forex for 20 years, and when you're trading a 24-hour market, it's a different beast altogether. So it's an environment. It's just an environment. All right. So yes, great reminder. You can come join me at futures. I'm going to be hopping into that room in 2 minutes. My futures traders, my Simpler Futures folks that are in the room right now, just a quick update on the schedule. I'll be in for the open. We're going to do the day trading as we do. That's our typical Thursday routine. And then I'll be going into the mid-morning session, just covering for David today. And we're actually going to take a look at some of the longer term setups, some of the sectors, some of the individual futures contracts, and look at some of those longer term swings that are still valid, because not all trends are broken. We can't look at the market at the index level right now. So just a quick update there. All right. So should I leave the NQ alone today? Hey there, Marty Jean. Depends on the time frame again. You talking about daily? Yeah, I would leave the NQ alone. In the free video, I think in the free video, Marty Jean, check out the Simpler Futures free video from yesterday. And I talked very specifically about the zones and some of the VWAPs and things that I was looking at on the NAS and the zone. We're actually pretty close to an oversold zone right now. But if you're looking at day trading wise, different conversation. Would I prioritize the NAS? No way. No way. I think there might be some individual stocks that could be relative outperformers. But to talk about a breakout in the Qs, to me, that's the wrong mindset. You want to think about, if you're bullish, where is that oversold level? So going back to not being a dip buyer, not being a trend follower, but thinking about where that lower edge of support may be. Use some volume, use some VWAPs, use previous lows, use some Darvis. I've got some VWAPs that we've had. Check out that video. I think you'll find it really, really helpful. Okay, gang, and just like that, we get a whole lot of Raghee today. Yeah. Devin, look, we wait for the markets to organize, right? I'm not going to guess at what it's going to do. Clearly, it's going to gap down. There might be a fade, really, in the works. So I will definitely keep an eye on that. And Jonathan, your question about when I'm getting stopped out of any position I'm in. Remember, use the stops we discuss in the Sector Secrets Mastery. We make it really, really basic. We know what the validity of the trade is in terms of the trend. We also know what our tolerance is for the market moving against us. And that's that percentage of premium we talk about so much, so that I know when I buy an option what the worst case scenario is. I stick with that. We can always look at a trending market transitioning into chop and re-engage, but take your stops as they come, especially in this environment. I'll see you all tomorrow for Charts and Coffee again. Same time, same station. Be good to each other, gang.